Hello Vikas, it's good to see smile on your face because every market participants I've spoken to, somehow the smile is missing.
Once you are in the market, you have to get used to deal with all kind of situations. So it's best to smile and deal with the volatility.
Because is this the darkest dusk before the dawn, or we are in for a long, painful 6 to 12 months of a time period where we will get excited, we will get optimistic, we will participate, but the net result will not be rewarding?
I think if you see Nikunj, current market situation is fairly fragile and chaotic, and I think we are seeing mixed news flows coming from all sides, global as well as the local, and that has confused market. One side we have situations where there's a lot of liquidity constraint. There's a every day there are default kind of situation coming around, rating downgrades happening. Other side we have a data of tax collection going up. So I think it's a very confusing situation right now. But the way I see today, I think we are right now facing aftermath of IL&FS crisis, and that credit squeeze or credit freeze rather, I would say, which we have had in the economy, is creating huge amount of problem at this point in time. And unless we sort this out, it is unlikely to recover anything time in a hurry. So it really depends on what kind of measures government and RBI put together comes to release the this credit freeze which we have seen in the system to start again or restart again. And till then, we will have a slow and steady, painful kind of recovery. So my view is that it will eventually happen, because it's not that credit freeze cannot continue forever. This current risk perception cannot continue forever. Even if government doesn't do that, with the passage of time it will settle down and slowly we go back to normals. So that the question you asked, what kind of time frame it can take. So if there's a coordinated action by, let's say, government and RBI to restart the credit freeze, then we can restart maybe in 3 months time, 6 months time. But if there's a prolonged situation of the continued credit freeze, then I think we might go to even 12 months. And it really depends on what kind of measures come out. And I do believe that there's urgent, more than anything else, more than tax cuts, more than rate cuts, there's a need in the economy to restart the credit freeze. Because when you go and talk to SMEs and businesses, they have demand. It's not a demand issue. It's right now issue of money. You have an order you can't fulfill because you don't have credit available, or you don't have a working capital available. You have auto customers, but there's no financing available for the buyer. You have a house buyers, but they don't have housing finance available from the system. So I think this is what is creating a sort of slowdown or painful process in the system, and I think that is what we got to address urgently. And in my opinion, timing of recovery will depend what kind of measures are being taken.
Okay, Vikas, just want to get your view on some of these metals, metal names, because, or as a pack, there are a couple of conflicting views. I mean, on one hand, we are seeing a trend in the market, some voices talking about a focus more on cyclicals versus, versus what we're seeing in consumption. But specific to metals, of course, a risk to earnings. That's what we've got some brokerages citing for some of the major steel companies. We've already seen a whole host of them see quite a lot of selling coming in, whether it be on risk to on earnings, or of course also what we're seeing on the pricing front. So things are not really stacking up, so as to say, when it comes to some of the metal majors. What would be your view?
So I think, anyway, metals, I'm not an expert on metals, to be very frank, but I can make a generic comment. I mean, stocks have been kind of reasonably beaten down, or stocks have not performed well. And I think if, let's say, emerging market recovery happens, and if little bit of, stability comes on that side and Indian economy side, you will start seeing metals also performing well. But again, it's a very complex, subject to understand. So I don't have a strong view either on, especially on the metal complex.
Vikas, would it be a little foolish to expect much from the budget, or do you think all that chatter around maybe a stimulus announcement to try and prop up both the rural as well as consumption distress in the urban side of the economy is valid? And do you think the finance minister in her maiden budget has that kind of elbow room to announce any kind of stimulus?
So I think my view on budget has been, see, what can finance minister do from an announcement of budget perspective? It is more than the announcement of the budget. I think what actions are followed, that is more important. See, budget announcement value always will live for 2 days, 3 days, 1 week. I think then market will go back to reality of saying what is happening again to the earnings and to the demand scenario or the credit supply. I mean, just think about it. They have 2 or 3 choices. They can cut down tax rates, which I think are very highly unlikely. That could the market expect, but that is highly unlikely. They could probably, announce, in my opinion, a big divestment, strategy, that how are they going to garner a significant amount of, resources from divestment, both strategic. And if government, let's say, puts a strategic map out there, that would be very well received. Thirdly, I think fiscal deficit. A market will keenly watch what kind of fiscal deficit the government is targeting. Are they loosening a little bit? A market at this point, I would not mind if they loosen a little bit. So all these things, if they were to put together, probably market can rejoice, short term. But that is unlikely to get the economy going, from the next day of the budget. Because ultimately the real key thing lies, we have to understand budget will go, but real key thing lies that how day-to-day operations are happening on the ground level or in the economy, and what is the real bottleneck. Today, tax rate is not a bottleneck. Government spending is unlikely to change anything game in a big way. I think what we have to get going is the credit side, in my opinion. So I don't think budget, no budget. Of course, a good sound budget creates a feel-good factor, but more than budget, I think we need to address some of the real issues of economy than anything else.
Because let me construct a scenario here. I mean, we both know that this shall also pass. What we are feeling right now in terms of the market mood, the bent of the economy, the consumer behavior, it will change. I mean, India is going to grow and we will definitely be in a better place a year from now, 6 months from now, 3 months from now. I'm sure that is the only thing which we need to debate. But for a stock investor, do you think for someone who's bought into stocks right now, which is in June 2019, he will be rewarded handsomely 6 to 12 months from now? Or right now the stock picker in you is not excited to pick up bargains even though stocks have fallen?
Nikunj, I think, I have said this, multiple times. I feel that 2019 vintage will be very, very good vintage. Whenever you invest, when big money is made only on the walls of worry. Whenever markets are worried, risk perception is very, very high. That is the best time to invest into equities, and I do believe from next 3 to 4 months, even in this chaos, we should invest into the market on a systemic basis, because whatever we are seeing, it is going to not last. I mean, as I said, that with passage of time itself, things will pan out, and I'm sure this government will do certain things to resolve the current crisis, to push forward the economy. They are committed to it, so I'm quite positive on the market. All I was highlighting was some of the current real concerns of the economy, and I'm sure it will get addressed. So investors should, and I'm a very big believer from a medium term to long term perspective, equity shareholders will create serious amount of wealth. Probably this vintage would be similar to what we saw in 2014. So this vintage would create a serious amount of wealth for market participants across the caps. And especially in some of the mid cap, which has corrected significantly. So I think one should definitely look to invest into good quality names, sectors on a systemic basis over the next 3 to 4 months, and especially when markets fall significantly, rather than getting worried, that time you should increase your allocation. Again, I would say that you can never time out how much market can go down, but surely if you are looking from a long term perspective, you will create 15 to 20% compounded over the next 3-4 years. I mean, I have a very little doubt on that.
You spoke about, some would argue that the early signs of where the vintage would be good, markets are already capturing in. And let me explain my question here, or be slightly more descriptive here. Bajaj Finance, a stock which we know will only become better in this NBFC crisis, has not corrected at all. If I look at a retailer like Trent, the stock is sitting at a record all-time high. HDFC Bank and ICICI Bank, two banks which will gain largely because of high CASA, those stocks are sitting at an all-time high. Within the NBFC space, you got Sundaram and Chola, which have not corrected. So some would argue that yes, things will get better, consolidation will happen, but aren't markets pricing that already?
No, I think see what names you said also represent only a small part of the market. It's not, I mean, of course they are important companies, they are very, very good companies, and and they are, but it's not that market is only, or they have currently taken leadership given an uncertain environment. Typically the flight to safety or flight to good quality is always the case. But as the risk appetite returns, I mean, I do believe that some of the names which you mentioned would underperform, not because they are bad companies or they will not grow, but because the money which has found a lot more comfort in them right now would move out and look for better or risk reward opportunities. And that readjustment always happens in the market. We have seen in bad times, typically quality companies tend to trade expensive, and good times, they come down and other companies go up. So it's a constant rebalance which keeps on happening. I have no doubt that there will be in every bull run, there are companies after 2008, Bajaj Finance was not there, and it's in last 10 years it has come up, right? So in every market cycle, you will find companies which will scale up. Some companies will disappear, some companies will scale up, and that is where the the juice of investing lies. That can you identify who would be the next leaders, who would be the sector segments who could create. Like ICICI Bank has not participated in last 10 years at all. Could this be a next or for that matter even Axis Bank has not participated in the last 10 years at all. So could these be the next leaders of the market? Possibly yes. So I think one has to constantly look for and I don't necessarily look at all-time high is the only reason why you should not invest into, but as the businesses grow, can they grow further? Can they really have the long legs of growth ahead of them? If answer is yes, then one should look at. So I think one has to look at for next in every cycle there will be new leaders, and you will find in this one as well.
Okay, and we hope that the names that you talked about, Vikas, are just some of them, ICICI Bank, etc. But great speaking with you. Good to have you on the show as always, Vikas.